All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So, overall, really sideways to up week for the most part on the indices. We did get some earnings out of the way, more earnings out of the way. Last week we talked about Tesla and Netflix. They're still under a little bit of pressure here as they came in off of the highs there. But we had Google, they reported, and stock acted well here, had a nice pop. Microsoft, on the other hand, came in, and that is kind of tested that 330 handle, and that has come decently off the highs. I think the market likely holds up. We do have Amazon and Apple next week, I believe on Thursday. So it's likely that we hold up at least into those announcements before kind of, picking any sort of new direction here. But big tech earnings starting to come out of the way here, and we are well into the heart of earnings season here. But markets right now, we did have a little bit of volatility on Thursday. So Bank of Japan announcing they're going to be tweaking that yield curve control program, which does interrupt the carry trade. And if that continues, it can really disrupt markets. But right now, the market, we're in this very, very much a buy the dip environment. Any sort of dip here is immediately bought. We can in fact see here puts currently right now are the cheapest that they've been on record, at least on average. There, we're in that type of environment as well. ETF inflows here are at kind of the high end here, the FOMO level as opposed to fear. Does that mean that we're going to top right now? It doesn't mean anything. It just means that conditions right now are in kind of a euphoric, where markets are very stretched. You get that type of any sort of dip gets bought, get in at any price. And you can see here on Thursday, or rather Friday, post that BOJ news, they did, it did get kind of priced in on Thursday to an extent. We didn't even go down and test this trend line nor the 20 moving average on Friday. I said to my traders Thursday afternoon, I said, look, it's a nice reversal here, and we never got really any follow through on this move here. So we had that 1 day reversal, and then on Friday we kind of just, we just gapped right up and just went sideways all day long. So you can see there, markets are still holding up. Really, until we break this trend line and, subsequently the further trend lines, you can see they coincide pretty nicely here with the 20 and 50 moving average. This market can still hold up. Next real level here, we've got priced in at right about 462 on the spiders. There's also a gap right at 464. So 464.72, and you can actually see it on the weekly time frame as well. You see that gap right there. That never got filled. So that was a little bit of a breakdown gap from last year. That could be a level as well. But overall, you're at 457 right now. What's another 5-6 points there on the SPY currently? Now, I do think as we get kind of into the middle part of August time frame, this market may start to run out of steam here. We've had a really big run, but right now, again, you need some sort of technical damage to be done. I do think maybe you're seeing a little bit of signs of starting to see distribution there. Again, the markets, when they top out, it's very rare that you have a big reversal and then you just kind of come down very sharply. It's usually kind of a rolling top. Again, if we go back to last year, we'll just kind of roll the tape a little bit further. You can see, if I can zoom in properly, there we go. You can see you get kind of an initial distribution phase and then maybe make new highs, but even to here, you kind of come down, you have a flat, no new nominal high, and then you make a nominal high, and then it comes down. It's kind of a rolling type pattern there. And that's usually how tops are put in. It's very rare that you get a move like we saw during the pandemic where it was just straight down. So something to watch there. I do think right now, upside in the markets, and I've said this kind of recently a lot, but I think it's really starting to I think we need to hammer this home a lot. I think the upside is less so in the NASDAQ. You can see here, even with that nice earnings report from Google, although Microsoft did offset it, lower highs on the Qs. Now, that doesn't mean that doesn't necessarily mean lower highs yet, right? Because we haven't taken out the low. So if you take out this low here at 374.34, then you have a lower high and a lower low. But Qs are not making new highs right now versus the spiders. versus the Dow, which have. So we're starting to see a little bit of exhaustion here. I think there's AI fatigue going on. We talked about that a little bit last week. I think a lot of those earnings reports, they kind of priced in the best, right? And when that happens, it makes it harder to continue to rally. I mean, Microsoft, they crushed earnings, but, the market's starting to look at guidance here and look in the next quarter and say, well, can they keep these? Can they sustain these valuations here? Can they, we had that, I talked about it last week, the Taiwan Semi CEO coming out and saying, look, there really isn't that kind of demand for these AI chips just yet. And market's kind of coming to that realization. So we are seeing some rotation into other sectors, which we'll get into in a minute. But I do think the Qs, as you see here, are going to kind of underperform over the next couple of weeks. That doesn't mean that they can't make new highs. I just think underperformance is likely relative to kind of the spiders and a few other sectors here. But again, same story there with the Qs. We did get that psychological close above 380. So that is an important sign there for the Qs. And the next level is right around 390, which we're not that far away from. Currently, you see that pivot there going back to January of last year. And again, as long as we did do a little bit of, I hesitate to call it chart damage, but we kind of closed below that trend line once on the Qs. No follow through though, and no real close or even pierce of the 20 moving average. But again, you see here how we did test that trend line versus the spiders, which did not test its respective trend line. So again, Q's a little bit on the weaker side. I expect that to continue, possibly post Apple and Amazon earnings. But again, no real technical damage until we close and confirm below these trend lines. Then you can start talking about downside projections. But until that happens, markets can go higher here, so they need to be respected. Dow did get to that 355 area. So again, there's your pivot high right there. And we did test that this week and closed slightly below it. But again, Dow holding up okay, a little bit short-term overbought right now, so that may need to do some backing and filling to get through that pivot. But Dow is holding up okay. The Russell's holding up okay as well. Had a really big outside reversal on Thursday like the rest of the market did. But then again, gapped right back up on Friday. And pattern-wise, this isn't terrible here. You have a nice up move, and you're just you have the kind of sloppy daily chart consolidation. I do think this can get up to 200 to 202 and possibly retest this blue trend line again. So Russell 2000 hanging in there okay. The regional banks did get a little bit of a bounce this week, and I think technically, as far as the technical pattern is concerned, they are okay right now. There may be some more problems in the fall for them, but you get these kind of squeezes to happen. They have, earnings are getting reported right now, and you're seeing covering post earnings. When the regional banks rally, it's definitely going to help out the Russell 2000. There is a lot of them in there, and historically, the regional banks are a low beta sector, but they have a very high beta right now because of current events. So, but anyways, Russell hanging in there okay. Semiconductors holding up as well. Little bit on the weaker side though last week, and we did see some sell volume on Thursday after the gap up. So we're seeing a little bit of distribution here in the semis. They're still holding up okay. Still made a new weekly all-time closing high, but was not able to significantly, definitively close above double top. I mean, I guess you could say we definitely closed above double top, but no real conviction here just yet. But semiconductors holding up okay, and when that is the case, we want to be aware of that for the markets. Until you break this trend line, which is very steep here, again, markets can go higher. Semis are hanging in there, and we got to respect that moving forward. IGV, cloud software, again, hit our 367, 370 level last week. We pulled back, and again, just an inside week this week after retesting the 20 moving average. Again, no real technical damage until proven otherwise. So IGV holding up as well, as was the Dow Transports. That's been on a tear lately, and that has been really strong. We said 16.5 to 16.6 was going to be a level to watch last week, and that's where we got up to Wednesday. We pulled back Thursday and then Friday right through it. So transports actually closed above that. 16,728 is this red bar pivot high, and then you have 17,000, even a whole round number just above that. Transports are overbought. They're very stretched here, especially on the weekly, but they are very strong, and you got to respect that. They are holding up really well here. So transports hanging in there and leading the markets higher. All right, over to interest rates. So let's take a look at the 2-year first, as always. And there we go. So, whoops. All right, 2-year here holding up really well. Again, Interest rates still look really good. Bond yields holding up. The Fed did raise rates, obviously, by 0.25%. And that gives the market a little bit of wiggle room. That gives the Fed a little bit of wiggle room. But if we start to take out this pivot and you start getting above 5.25, that is going to be problematic for the market. Eventually, I do think that happens. How quickly that happens is really the key, right? So the market can, we can have higher interest rates and the market can still hold up. It's a matter of, does it get above that Fed funds rate? Does it do it quickly enough? But right now, 2-year hanging in there, 5-year holding up as well. Nice strong chart pattern here. I don't see any issues. 10-year, we had that breakout, we back tested it, and we're popping. Here, you take out this pivot, it's back up to double top. 30-year, same thing, higher lows. We've had that kind of ascending triangle look. I've got the lines drawn in here. On my other chart, you can see ascending triangle look, and we're pushing above that again. You take out 4.1. This is going to go in and test this probably 4.25 area on the TYX. So again, rates holding up really well. Markets don't need to care right now until that Fed funds rate gets clipped by the 2-year yield. So that is something to watch moving forward. But right now, yields themselves are continuing to hang in there. All right, XHB, so over to housing. New weekly closing high here, at least 52-week closing highs. Still have not taken out the double top right now, but XHB holding up, as is the ITB. So again, these can still go higher. They are very stretched, very overbought, very long in the tooth. But the trend is up, and we need to respect that for now. VNQ pulling back here off of this trend line. So again, kind of general rule of thumb is that third head of the trend line is usually a fake out. And you can see here on the weekly, 1, 2, 3, we did try to pierce it. We came back. This is going to be key. We got to hold 84 and really probably 83.24 respectively. That weekly red bar, weekly green bar, breakout bar right there. You hold that low, this can hold up and curl back up and push up to that 90 handle. So VNQ holding up well. I don't hate this pattern. It's firmed up a lot over the last couple of weeks, but we'll need to see it kind of hold this area here. And if it can, then you can push up into 90 to 92. But VNQ hanging in there, although it did pull back. And it was red on Friday, whereas the rest of the market was, pretty much break green for the most part. So something to note there. Financials here, XLF. So most of those earnings are out of the way. That does have a lot of resistance at 36 to 36.25, but we did get kind of that psychological close above this trend line here. Not so much though the 100-week moving average, but right here 36.20, 36.25, that weekly red bar, breakdown bar, that's going to be your big level there to watch on the XLF. KRE continued higher this week as well. Again, remember, lots of short squeezing going on in these banks, regional banks, post earnings. If they're not falling off of a cliff, you're going to see covering. And that's really the story right now. That doesn't mean the fundamentals have changed, but you need to respect the technicals in the near term. And KRE consolidates. It can go, up into 54, 55, believe it or not. Those are the numbers I've got worked out for that. And then KBE, that can actually get up to 45, 46. It did stall out at the 200 moving average right now. So it may need to do some continued backing and filling, but I don't really see any issues currently. Broker dealers here pushed up again. They pulled back on Thursday like everything else. They're just very overbought here, but that can still get to 530. May need to come test that 20 moving average, or at least have the 20 MA come catch up to price. Figure, in May, this was at 415, it's at 520, right? This isn't a tech stock. It's broker dealers, right? So pretty stretched here like a lot of things, but again, trend is up. So you got to respect it. All right, let's get over here to energy and commodities. So crude is holding up really well. I'm really starting to like what I'm seeing here from the energy sector. We now have a weekly close. We talked about this last week. We got it here. So 76.69. We closed above that last week. I said the next level to watch is this trend line. We closed above that. So very, very strong here. Price action. This is a big red bar. And we were just chopping inside of that. That can implicate a bearish pattern for a move lower. That's why I said it was kind of neutral to bearish oil. That's negated. So the next level here is 82.72. That is this red bar high, right? So I'm not even so much concerned with this 83.53 area, but you get a weekly close above this, and obviously more so 83.53 as well. I think the lows are in on crude. and it probably goes up into the low 90s in the not too distant future. But right now the pattern looks very good. It's shown a lot of strength getting above these levels. That shows you there's institutional participation. And in the energy stocks, XLE did something very nice this week as well. You guys know my weekly level there, 85.08. We closed above that. That is a sign of strength. XLE can go to 90 now. So energy stocks, holding up really well. This is a bullish pattern here on the daily. Exxon, Chevron reporting on Friday, and they really kind of a nothing burger. They did sell off a little bit, but they came nicely off the lows in the XLE itself. That looks fine. A little bit more basing here. This can be bought up to probably 90 to 92. I think the XLE looks good. XOP still holding up as well. That looks like it wants to go test kind of at least one of these trend lines here. You're not too far off of this one, and then obviously this one here probably takes you up near that 150 area. It's a little short-term overbought, but it's holding up well. OIH also hanging in there really well. That wants 360 to 370. I would like a pullback, but it's just not giving me one right now. But again, these energy stocks, energy space looks really good right now. They're breaking these weekly resistance levels, and they're doing them on a weekly close, which is very important to see. Nat gas, another consolidation week here, pulled back Wednesday, Thursday, and then Friday got a nice little bit. I really like what it's doing on the weekly. This has been a really, really just a grind here. But you now have this big green bar, and you've just been inside of that for the last 6 weeks. So I think it's building a base here for a push up. But again, nat gas, another consolidation week, and I really kind of like what it's doing there on that weekly time frame. But again, still just kind of baking in the oven right now, and we'll see if that can get going next week. I think it just needs some type of a catalyst, whether that be news or something of that nature. But nat gas holding up there as well. Dollar index, DXY. That actually held up decently this week. So like we talked about a bounce possibly going to 102. That's exactly where it went. And then it pulled back on Friday, but still finished green, little doji after that power move on Thursday. So the markets had that big sell-off on Thursday, and obviously the dollar was green with the markets being red. Then the markets, as we looked at the spiders, SPX, gapped right back up. It was like it never happened, but the dollar held up, right? So that's just a little inside doji, no problems there. If that can flag and base, the dollar can have another push up again. However, on the weekly, it doesn't really mean anything until we get above 102.56 spot 4. You close above that, then I think there's a bear trap in the dollar, and it can go higher, possibly a lot higher. But until that happens, we're going to be neutral on the dollar, but it did get a nice bounce. And for me, I wanted to see how it reacted at 102. And it reacted well. It did not reject, right? So, if we came down and we had a big red candle and closed back below the 20, then I'd say, well, the dollar is probably weak. But as of right now, it's holding up, and we'll just be neutral on it. If you can get a flag pattern here of some sort, then it can go attack that 102.56 area. But until it closes above that on a weekly close, Friday close, we're just going to be neutral. But the dollar did hold up, and we'll definitely respect that. All right, flipping over to gold here. So gold had that little contract gap, and it did come back in. Let's just use the GLD for now because I hate those contract gaps. And it, came back in Thursday, closed green on Friday. Nothing terrible here, just kind of flagging. If this can break above these pivots, then you can push up into 187.50. For gold futures, probably 2040, 2045. We'll see if it fills that gap though. A lot of the time when you get that a big contract gap like that, you reverse your green on Friday. Does want to go and test that and fill it. So the pattern here is a little sloppy, but gold, it's holding up, and we'll leave it at that for right now. Silver, on the other hand, did have a pretty good outside move down on Thursday, and on Friday it did bounce, holding the 20 moving average for now. If you lose this area though, it's back down probably to that 200 moving average, which would coincide with, again, this previous trend line right there on silver. And if you lose that, it's down to 21. But right now it's holding up, and we'll leave it at that. I don't really see any problems here, at least not currently. I do want to point out, so we talked about the dollar. Let's look at the euro. So the euro here, because this does obviously relate to precious metals to an extent. This is your level here, 109.428. If you get a weekly close below that, that could be problematic for gold and silver, at least priced in dollars. And then you're going to need to go test this trend line, and that would probably be a tailwind for the US dollar. So just something else to watch there in the precious metals space. Okay, over to platinum, that did back off. I'm rooting for that to get a little bit lower here. I do think there's a really good buy level in platinum, buy opportunity in the 850, 860 area, maybe a little bit lower. So I would like to see a rejection here and one more push down in platinum, but that did back off this week. And then palladium, you guys know I'm still looking for sub 1100 on that. I really think that is a good level to start accumulating PA. Copper actually firmed up pretty nicely this week. I don't know what it wants to do in the medium term. In the short term, I think we can get a retest of 4 to 405. So you're having this nice higher lows here, kind of equal highs. You can make a case you got a little bit of a kind of wedge here. So kind of slight lower highs there. And if you can coil up a little bit more, I think this can push up to 405 in the medium term. I still think this has one more corrective move lower, but right now it's holding up. And again, we'll respect that there. So if we break above that wedge, then we'll look to 4 to 405 on spot copper. All right, lastly, Bitcoin here. A little bit of a sell last week, and then kind of just inside bar bear flagging. So we have kind of a duality here. So daily chart is weak. So down move, bear flag, picture perfect bear flag. But again, if we look at the weekly, you know, it's like the exact opposite. Up move, picture perfect bull flag. I think that on the bear side here, if we go to the daily, this is about ready to try to break down. That does not mean it's going to break down. It could be a test. We could test 28.5 and then bounce right back up. But I think it's ready for a test here, possibly tomorrow, if it's going to break down. So watch this 28.6, 28.5 area on Monday. If we do come down and test that, if we hold that, then you're still, I mean, you still have no problems here on the weekly, and this can still push higher. So again, weekly, remember, weekly is still more dominant. Daily is giving you a bear look. So we'll see. 28.5, 28.6 is kind of my line in the sand right now for that, for Bitcoin. But still, the weekly is holding up, so I'm going to go with the weekly as it is more dominant. But we'll see if it can start to test that area, and if it does, we'll continue to watch it moving forward. But right now, those are the levels that I'm watching there on BTC. All right, lastly, back over to the spiders again. So markets here stretched. Again, big takeaways here. Apple, Amazon later this week. I do think the market, holds up at least until then, at the very least. But right now, I do think big tech is kind of on the, I think you're kind of seeing that rotation, right? So KRE, XLE, I think even XLV healthcare getting a nice bid. We're starting to see a little bit of rotation into other sectors here. As you see that kind of big tech fatigue here, and the market's starting to look into other areas, what other areas can rally as we get into the fall. But right now, as far as the markets are concerned, there's no real technical damage until we take out either of these trend lines. So the markets can go higher unless proven otherwise here. Big level to watch this week, 462 to 464 on the spiders. If we take those out, then you can push up, possibly into that 470 handle. But again, one level at a time here. Markets very stretched, and it can be very touch and go when you get these big distribution signals. Sometimes you can get follow through with them pretty quickly. Obviously, that did not follow through on Friday. But just something to keep an eye on here moving forward. Again, just watch those technical levels and those charts. Will generally guide you pretty well. Anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.